Welcome to today's video, where we'll be diving into the complex and ever-changing world of the US dollar and the banking industry. As we all know, the US dollar is the world's primary reserve currency and the backbone of the global financial system. However, in recent years, it has been facing a number of challenges and threats that have sent shockwaves throughout the financial industry. From the Federal Reserve's interest rate decisions, to President Trump's trade policy, to the growing trend towards diversification of reserve portfolios, the US dollar is facing an unprecedented level of uncertainty and instability. And as the backbone of the banking industry, the fate of the dollar is closely intertwined with the fate of the banks. So buckle up, grab a notepad, and get ready for an eye-opening exploration of the current situation of the US dollar and the banks that rely on it. Before we continue to our video, make sure to smash the like button, subscribe to our channel, and hit the bell icon to never miss any of our future uploads. So let's dive in. With almost 60% of all foreign exchange reserves kept in US dollars, the US dollar is the most commonly used and acknowledged currency in the world. This illustrates how significant the US economy is and how strong the US currency is. The US dollar's usage as a reserve currency around the world is one of the key factors influencing its significance. This indicates that other nations use US dollars as a form of currency insurance to support their own national currencies. Additionally, it implies that the majority of foreign transactions, including the buying and selling of goods and services, as well as the payment of interest and dividends on investments, are paid in US dollars. The US has a large economic and political impact thanks to the US dollar's role as the world's reserve currency. This is so that the US can finance its loans and pay for its spending without having to worry about the immediate effects of inflation or currency depreciation. Due to numerous economic, political, and social causes in recent years, the US dollar has become more and more susceptible to changes in the financial markets. These are the things that make you susceptible to changes. Federal funds rate. Setting monetary policy is one of the Federal Reserve's main duties as the nation's central bank. The Federal Reserve does this, among other things, by changing the interest rates it assesses banks for borrowing money. A federal funds rate, an interest rate established by the Federal Reserve, directly affects the cost of borrowing money across the whole economy. Changes in interest rates are a tool the Federal Reserve utilizes to impact American economic activity. The Federal Reserve may boost interest rates in a robust economy to reduce inflationary pressures. In contrast, the Federal Reserve may cut interest rates during a recession to encourage borrowing and spending. The Federal Reserve has been crucial in influencing the strength of the U.S. currency in recent years. The US dollar's value in relation to other currencies can be significantly impacted by the Federal Reserve's decision to raise or cut interest rates. When the Federal Reserve raises interest rates, banks must pay more to borrow money, which drives up borrowing costs for consumers and companies. This might result in less money being spent, which would slow economic expansion. Trump's trade policy. One of the key elements influencing the strength of the US dollar in recent years has been President Donald Trump's trade strategy. Trump has slapped a number of tariffs on goods from China and other countries since taking office in 2017, aiming to close the U.S. trade deficit. Although the initial effects of Trump's trade strategy on the U.S. economy were favorable, the unilateral tightening of trade relations with nations like China, the European Union, and Mexico caused a decline in investor confidence in the U.S. currency. The most important part of Trump's trade strategy were the tariffs he put on Chinese goods. Trump contended that China had been engaging in unfair trade practices, such as stealing U.S. companies' intellectual property and manipulating currencies, which had affected U.S. companies and resulted in a significant trade gap between the two countries. Trump responded by imposing tariffs on a variety of Chinese goods in order to close the trade gap between the U.S. and China and shield American companies from foreign rivalry. Trump's trade strategy initially benefited the U.S. economy, especially the manufacturing sector. As buyers sought for alternatives to Chinese products, the tariffs on Chinese imports increased demand for U.S.-made goods. The trade deficit with China was decreased and U.S. exports were boosted as a result. However, as Trump's trade strategy developed, it became more and more obvious that it was hurting the U.S. economy. Rise in geopolitical tension. The stability of the currency market has been significantly impacted by the expanding commercial danger to the U.S. economy. The US dollar's value has become more unstable as international tensions increase, causing a series of swings in exchange rates. Businesses have found it challenging to plan and invest as a result of this instability, which has slowed economic development and raised uncertainty in the financial markets. The protectionist situation has had a direct influence on the U.S. economy, in addition to the financial markets. Due in part to declining demand for U.S. exports as trading partners look for substitutes for U.S. goods, economic growth has slowed in recent years. The Federal Reserve decreased interest rates as a result of the slowdown in economic development in an effort to boost the economy and promote consumer spending. Despite the economy's slowdown, inflation has largely held steady. To avoid a deflationary spiral, the Federal Reserve has been under pressure to sustain its expansionary monetary policy. The Federal Reserve seeks to promote lending and investment, as well as accelerate economic growth, by maintaining low interest rates and introducing liquidity into the financial system. However, given the state of the economy, maintaining an expansionary monetary policy can be difficult. As the economy begins to recover from the pandemic-caused downturn, inflationary pressures are starting to grow. Global reserve currency. Being the main reserve currency of the globe, the U.S. dollar has long dominated the world economy. Due to their stability and liquidity, dollars are held as a type of monetary reserve by numerous nations and international organizations. But as the U.S. dollar's volatility has increased, there has been a move towards diversifying reserve holdings as many nations seek for alternate forms of payment. The uncertainty surrounding the U.S. dollar's long-term stability is one of the primary drivers of this trend towards diversification. As we have seen, a number of factors, including geopolitical concerns, trade policy, and monetary policy, have recently had an impact on the U.S. economy and financial markets. As a result, there has been a rise in market volatility, which has worried investors and policymakers about the long-term viability of the dollar as a reserve currency. Many nations are now trying to diversify their reserve portfolios by investing in a larger variety of currencies and assets in response to these worries. For instance, the BRICS nations have already begun trading in currencies besides the dollar, such as the Chinese yuan. As alternatives to the dollar, other nations are now looking into the euro, the Japanese yen, and even cryptocurrencies like Bitcoin. However, the move towards diversification is not solely motivated by worries about the U.S. dollar's stability. The expanding economic cloud of emerging markets, especially China, is also contributing to it. These economies are progressively attempting to diversify their reserves in order to lessen their vulnerability to any particular currency or asset class as they develop and become more integrated into the world financial system. Overall, the trend towards diversification of reserve portfolios is a complex and multifaceted phenomenon, driven by a variety of economic, political, and social factors. While it has the potential to promote greater stability and sustainability in the global financial system, it also poses significant challenges and risks for the U.S. economy and the international monetary system. Hope you guys enjoyed our video. Make sure to subscribe to our channel and hit the bell icon for more videos. Thanks for watching and have a wonderful day.